Hello everybody, this is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi everybody, welcome back to my podcast. Before we start the podcast today, I'd just like to say please spend a couple of minutes today to pray for the deaths in India, for all the deaths from COVID-19. It's very sad listening to the news for the past 40 hours, so many people died and so forth. Please spare some thought on them. So anyway, let's start. So thank you once again for listening to my podcast. Basically, for the past week, thing has been in the financial world in America anyway. It's been up and down, haven't been making too much headway. I think, again, it's trying to find a top. And one day it's going down a couple hundred points, another day coming back out $300 points, so forth. So for the week, haven't made too much of progress, so to speak, and it seems to be across the board for NASDAQ as well as S&P 500, and we just have to wait and see how it goes, either breaking up or breaking down in the stock market, just getting a bit of stagnation so far. But on Wednesday, Netflix did come up with news that of its subscription growth is actually much reduced. I think they reported 4 million instead of the forecast of 6 million, and people basically just not logging on to Netflix as much as they was expecting. I suppose this has partly to do with some countries in the world starting to coming out from lockdown or reduce restrictions, so to speak, and people want to spend time outside than watching videos or streaming things from home, away from outside on the park. They would much prefer to spend time talking to their friends and families and so forth. So this is the type of things that probably we'll see across the board. Like it will be similar thing for Amazon as well as Disney Plus or Sky, those kind of movies, streaming company. The subscription probably come back down a bit more as more countries easing the lockdown, so to speak. And similar things then for like buying food, like Deliveroo, which I talked about a couple of weeks ago about the IPO and things. I think those delivery companies, for food delivery company, they probably will see again reduce of the demand, because people will actually like to go out to actually eat rather than stay at home ordering food. Some of them I still do, but I think they will probably reduce the demand somewhat. Like for example, in UK we have recently have a easing of the lockdown, and I see over the days and the weekends people are just spending a lot of time on parks and pubs outside the pubs itself, having food and spending time with family under the sun, so to speak, rather than stay indoor. And I'll stay at home. Basically, there's a pent-up demand for getting out of the house, that kind of things, to spend more time out there under the sun and actually see friends and family, that kind of thing. So they probably might still do delivery, of course, but just they might deliver it to the park or somewhere else. And they much prefer, like the UK, much prefer to go have a pint, have some beer, eat with friends, have some barbecue, rather than delivering food. So definitely going to have a bit of hurting the Deliveroo or Uber Eats, that kind of thing. On the other hand, the other big news this week is, I think personally has been talked about last week, is the Bitcoin. It's gone about like 65k or reaching about $65,000 per coin mark, and then this couple of weeks recently gone down to like now about this weekend is about 48-50k mark. So it's gone down like 15k for the last 2 weeks, and it's quite a bit of downturn. But I talked about it last couple of times. There's already like the MACD bearish divergence actually showing the MACD histogram, and it shows very useful sign to me anyway. This one is the best one to use from is bearish histogram. This bearish and bullish divergence, one of the best things to show up. And similar thing for gold, it has a slight, very little bullish divergence for gold, and gold now continue moving up. And this in line with the US dollar index actually gone down to, I think, as low as 90 for the US dollar mark, 90.10 or something, but then now come back up to 91. the U.S. Treasury bonds and yields are still reducing, and that means that more people somehow piled into the U.S. Treasury bond. But you have thought with the stock market up so much, people will go into stock market instead. There's hardly any interest. But why people start going back into buying bonds is that a signal to actually tell people that something might be coming, something might be wrong, and people start buying U.S. Treasury again, or what's going on, we don't know. But then this time, at the same time, gold is actually moving up, and we just have to wait and see how things go. But gold has been, I think, not as good as silver. Silver being lagging, but also lagging behind gold, but it's making a bit of headway last week or so, and it's really making some moves and doing pretty well. I think it's above 50-day, 20 days moving average. So basically, it's getting there, getting not too bad at all. But one thing I just really worry about with this difference between the basically the share prices and indices as well as the bond prices. I mean, so one way or another, something is wrong. One, either the stock market is wrong or the bond market is wrong. But my feeling is with people under lockdown, countries that are under lockdown, countries, the treasuries, and the government spend lots of money printing more of the currencies, and that basically will create inflation, either you like it or not, and it's going to cause quite a lot of inflation coming in. But at the same time, because it's COVID-19 induced lockdown causes quite a lot of businesses closing down. Yes, there's easing of the COVID-19 restrictions. Some countries allow people move about within the country. Then therefore more businesses, will start, employing more people and so forth. But many of them couldn't last that long. Don't have the money to back them up, and basically a lot of them will not reopen. I'm just wondering, over time you probably see, because of overprinting of money, see imported inflation, but at the same time economy is not firing on all cylinders, even though assuming COVID-19 vaccine is actually working, and which is not at the moment, and everybody go back to the workplace before the COVID-19. I think there's going to be a lag, so it's very much of, from my view anyway, of stagflation coming in. That is for next year, this year or next year as well, which is like inflation is increasing, but then the economy is not moving fast as much as people would predict, and therefore this is basically causing quite a bit of a increase in all sort of things against US dollars, or any countries have been printing a lot of money, especially like Japan, for example, that kind of thing. So like metals, crude oil, agricultural products, foreign exchange against US dollars, I think they all go up, mainly because US dollar, in my view, is weakening, and go with quite some more. Joe Biden already signed off that's $1.9 trillion for the general public, and then there's another $2.3 trillion for infrastructure development, and they talk about a couple more trillion more for spending other stuff. And this might come in on and on for the rest of this year or something, as U.S. desperately, U.S. government to restart the U.S. Economy, and probably will be overspending just like back in 2007, 2008. And that is going to be quite a drag on the US dollar index and US dollars themselves. But with US dollars being the reserve currency, and most things are rated in US dollars, so if US dollars decreases, that means everything else will go more expensive, and then and a lot of, let's say, US or UK importing things from outside, the economy is not firing all cylinders. They will have to borrow even some more money. Public spending will go higher, and people probably won't be able to spend so much on food and clothing or other services as they would like, because it'd be quite, in my view, quite lucky to keep the jobs. A lot of people lost the jobs, and they would start watching out how much they spend. So this temporary going out to eat or going out shopping, which I talked about earlier, will probably, I personally feel, is temporary. This pent-up demand, probably given a couple of months, maybe 3 months, no more than 6 months, people will start realize, okay, I bought or need God to go out do whatever things they want to already enough for like 3 months or 6 months, and time to settle down and think of what I need, what I don't need. So this initial surge of people coming out will definitely help the economy improving over a short term, but I think within a 3 months period, maximum 6 months, people will start slowing down and say, okay, what are the bills I need to pay, what the debts I need to restructure, and so forth, and jobs, they will be trying to keep the jobs. And so this kind of things, you just got to hang on for a while, and we'll just have to see how that will upset the stock market in a sense, because as far as I'm concerned, it's just like the stock market and the Main Street is not actually talking to each other. It's just so unlikely with each other. The stock market don't seem to telling what's happening on the Main Street, and also international traveling with the vaccines. I mean, it's just not very successful at the moment, in my view, and there's a lot of mutation running around. And I personally feel, WHO and United Nations, now is the time for them to come out. WHO and United Nations should come out and start, managing how much dosage each country should allow to have the vaccines for COVID-19, and then share them like a central point, and share them among to not just the rich nation or the developed countries, but also to poor countries and those countries who haven't enough money to buy things like South Africa or Latin America, I don't think. And those kind of things, I think that's where the United Nations and WHO should step up. But we just have to wait and see how things are. The COVID-19, how it can affect. Small people start using up the vaccine. There's more side effect. And then people initially probably panic, but I think the medical establishment, probably each country, they all will go and try to find a better, more stable vaccines. And some more of them hopefully get rolled out later in the year or maybe next year. And then slowly but certainly, I think people will start coming back out with more people in the world getting vaccinated. But in the meantime, I just feel that it's going to be quite a bit of hiccups coming out forward within this year as well. I think probably next year will be a year of more of a recovery, maybe second half of this year as well. So just have to wait and see how things are. Now, how that will affect the stock market, who knows? Personally, I just feel it's very much like 2007, 2008, U.S. government spending lots of money, printing lots of money, trying to jumpstart the economy. But this time, it's not a supply market issue. It's a worldwide COVID-19 pandemic issue. They might take much longer and take a lot more money to jumpstart economies around the world. And I think, again, similar to 2007, it's reached the bottom. Who can go to the bottom as quickly as possible, and we establish the economy again, and then we start the economy and come out of it again. I just personally feel it more like the East and West divide will show a lot more over the next 12 months or so, because Europe seems to having problems handling the COVID-19 issues. China and Southeast Asia in general seems to be able to hold on better. Not to say that they're not getting hurt, they do, but then it seems to be able to cope relatively better. And this is sort of like probably shows up in the indices as well, in trading and shares and so forth. I think that me being based in UK, trading mainly in Europeans and US market, I think there's also a case for later on actually look into China, Hong Kong, Southeast Asia in general, and things probably will move up quite a bit over there. So just to keep an eye on those. Anyway, basically that's enough of my rant. Let's have a look of the progress of the last week, what happened to my trend foreign portfolio. Coming up next. Okay, let's start off with looking at Apple. Short term is a buy, medium term is neutral, long term is a buy, same as last week. There's not much change here. Similar to Amazon, short term is a buy, medium term is neutral, long term is a buy. US dollars, Australian dollar against US dollars. Well, this one, long term wise, it's I think it stayed just above the 50 days 200-day moving average for the cross. Short term is a buy then, and so is long term is a buy. Medium term is still a bit neutral. I think, like I said before, the US dollar index being around 90 and recovered a bit to 91, I think is slowly showing weakness of the US dollar is showing up again. It recovered to 93 or something, 93.50 previously, about a month ago or 3 weeks ago. But now it's come back down again. So I think there's this battle between 90 and 93 area or 94 area, and if this break down to lower or higher, then we'll probably see quite a bit of movement between different crosses. As far as I'm concerned, I personally just feel US dollars go the weekend. It's just logical, but who knows what the market might do. At the moment, it seems to be going to be sideways. US dollar index just not moving down below 90 decisively, or even break above 93.4 or above the 94 mark. So we just have to wait and see. It's quite boring at the time, but then this is precisely the time that people keep their eyes off the market, and then slowly when a move actually just happens and you missed it, and then suddenly the moves comes in moving faster, and you're wondering what you have been doing, why you suddenly missed the signal. So this is the time to watch out for your trend following trading signal if you have one, not to miss out on the signals, because things might change very quickly. So for the time being, Australian dollar against US dollar, short term is a buy, medium is neutral, long term is a buy. Brent crude, short term is a buy, medium is neutral, long term is still a buy. So is WTI crude oil. Short term is a buy, medium term is neutral, long term is a buy. On these two, Brent crude and WTI, WTI crude oil seems to be better, and similar to Australian dollar against US dollars, it's also just about the 50 days over 200-day moving average. So we just have to wait and see. Next is DAX. Short term now this week have changed to sell. There's quite a bit of major move on Monday, but medium and long term still being buy at the moment. Dow Jones still continue with its byward ups move. Short term, medium term, long term is a buy. But how long will it last, we don't know. It just still so much rising wedge of triangle formation. And then recently, it broke above the top level of the rising wedge channel, and now do another rising wedge kind of thing. So it's just like volume seems to like just going normal. It's not having very fast increase of volume of increase in the Dow Jones index. So just wondering, is it really out of breath or not? Out of momentum. But the MACD histogram is not showing much of giving anything away, just basically bubbling along the sideways, not moving high or lower, just slowly moving sideways. So we just have to wait and see. Next is FTSE 100. Short term is a sell, medium term, long term is a buy. So same as DAX, with the FTSE 100 similar to the Germany. With the COVID-19 restrictions sort of easing a little bit, and some people starting going back to school and going back to work. But overall, FTSE 100 seems to be, short term's gone down a bit. We just have to wait and see how things are. Gold, on the other hand, short term is a buy, same as last week. Medium and long term still neutral. So it's moving up. It hasn't moved precisely as fast yet, but I think overall, even the price itself is the chart itself is also moved, breaking the downward channel. It's gone sideways. It has done recently a double bottom, a W-shaped recovery, and I think looking at just the chart itself is 1820, 1850. That's the current area. But as far as trend following concerned, short term is a buy. Medium long term is still neutral. Haven't shown much yet, so just keep watching it. Next is Hong Kong index. Hang Seng, short term is a buy, medium long term is neutral. So we just wait and see on that one. Hang Seng has sort of gone sideways quite a bit, so it didn't really follow much like Dow Jones does. But I suppose Hang Seng index is more following the Chinese market, more of that later on in the year when I get more data and so forth. But as far as I can see, Hang Seng index, the makeup Hang Seng index is very much towards China, Chinese company who operate largely in China than in Hong Kong or anywhere else. So it's like a proxy for buying into China in the future. We just have to wait and see. Next is Nasdaq. Short term is a buy, medium term is a buy, long term is a buy. So same as Dow Jones here, but just like similar for Dow Jones, how much can this last? It's just about difficult to see at the moment. Next is Nikkei. Short term is changed to sell now. Medium terms and long terms both are neutral as well. So we'll just wait and see how things are. Nikkei, for what it's worth, seems to have lead the European indices going up first. Maybe when Nikkei now coming down, maybe it's also a signal for telling us that the market in the West might be coming down. Who knows? Just have to watch it out then. Next is silver. Short term is a buy, medium term is neutral, long term is a buy. So similar to gold, seems to have turned the corner. Silver didn't really make any W shape, whatever, funny formation kind of thing, but it seems to recover better. It was lacking gold behind gold quite a lot, and then it just gone where it was sideways. Now it just recover a bit, and seems to recover look nicer in the chart pattern formation. But just have to wait and see. Next is US dollar against Chinese yuan. Chinese dollar, short term is a sell, medium term is neutral, long term is also sell now. So which means what? That US dollar's rebound as far as the Chinese yuan is concerned is finished as of last week and so forth. And it's coming back down now, especially the long-term system, 50 days over 200-day moving average is showing a sell. So I think Chinese dollar is strengthening, US dollar in that sense is weakening. So we just wait and see. This is also could be a good signal or gauge to indicator to show how strong the US dollar is. Also, next is US dollar against Japanese yen. This one again, similar to the Chinese dollar, is short term is a sell, medium neutral, long term is still also neutral. That one seems to be have been turning since about last week or week before, went to 110 or so for per US dollar, and now about down to 108 or just below 108 area. This might probably show us something, but obviously like Japan is an exporting country. With its currency strengthening against US dollars, that means yes, of course, whatever is selling to outside world, make this export less likely to be purchased by other countries, more expensive, so to speak, and that definitely hurt the stock market. We just have to wait and see how things might go. Next is British pound against Japanese yen. Short term is a sell, medium term is neutral, long term is also neutral, and after that is British pound against US dollar. Short term, different though, is a buy, medium is neutral, long term is a buy. And so we just have to wait and see. There's a bit of a splitting now. Before British pound against Japanese yen or against US dollar seems to go hand in hand, but now there seems to be a split. The Japanese yen seems to be strengthening, but US dollar seems to continue weakening against the British pound. We just have to wait and see here. Next is of course is Bitcoin. Short term is a sell, medium is neutral, long term is neutral. I mean, there's the last change of the last week or so, from 65k and down to just about 50, I think, at the moment on Sunday, 25th of April. And also, I think on Monday or Tuesday, U.S. government said they might put a tax on digital currency transactions or on the gains, that kind of stuff. And that definitely didn't help Bitcoin. Anyway, the S2, the Turtle System 2, has basically gone neutral from buy last week, and I was looking at it, and it talks like, this is worthwhile to spend time just talking about it. I mean, spend about 130 days in the buy trend and make about 191,000 pounds. Okay, you like £1 per pound, that kind of thing. It's quite a lot. Remember, it's gone up. There's a couple of things worthwhile talking about here. When Bitcoin first caught up, S2 system caught up with Bitcoin, it was down to like the 12,000 mark, 13,000 mark, which I talked about when Bitcoin actually broke above the 10,000 mark, and the Turtle System basically caught on to it, and only just recently have come out from last week, and you can see 130 days, almost a year. Started last year and coming just stopping this year. And also the other thing is pyramiding. Okay, if the prices continue moving up, if you pyramid right, you can gain a lot more. Now, from trading. Now, just look at Bitcoin itself. When the time it broke out was around 12,000, and then just recently closed around the 53,000 area when the trigger was or trigger, so to speak, and so you earn like 10k, 50k, 50k minus 10k, so about 30k. Let's say 30k for each trade, and then because you use pyramiding as per the trend following method that I talked about, the total system trading method and the pyramiding method, and you basically turn like 30,000 in one trade, changes and differences. If you buy 5, that is like 150,000 points just on that one. So it's quite a bit of money you can be made on Bitcoin, and this also show. Two things for me basically. Trend following, sometime catching the main trend is long term in nature and takes some time. In this, 3 things now. Not just long term, but also it tests your patience. You might thinking, money is burning my pocket. I need to move around or something. But do you have to? When system basically say don't move, then you don't move, and then you also doubt yourself, especially when spend 130 days or something in an uptrend. You're just wondering how long it will take to finish that trend. But this is what it teaches you is. To be patient, which took me a long time to learn this. I'm still learning it, but trust your system. That's also another thing. So long as you play your card right, so to speak, by following your system, pyramiding, and be patient, and just wait for the market to tell you what to do, and wait for your system to tell you, go neutral or go the another way, that kind of thing. Yeah, that's really relatively nothing much you can do. So this is one of the reasons. Why I choose trend following, because I'm a busy person. I got 4 kids. I got a busy job as well. I'm very lucky to still keep a job in IT, but I really don't have time to look at screen even over lunchtime, half an hour every day. Sometimes my lunchtime being hijacked by client phone calls, and I need to eat too, and I have to work. So by the time I come home, I need to look after my children and get them to bed and so forth. And when everything's settled, like 10, 11 o'clock at night, I really be too tired to look at the screen, even trade for half an hour, 1 hour. And by that time, the currency market or the stock market, mostly are closed or very quiet. And how am I going to trade in that sense? So day trading is not really for me. But I think trend following overall, real trend takes time to develop it. And it takes time to play yourself out, and this basically show a lot about what trend following is supposed to do, and it really fit people who has a long-term view. I'm using end-of-day data, and also busy lifestyle as well. It's difficult for me or someone like him saying the day trade, sitting down half an hour here, half an hour there to trade. It's kind of difficult, but like you look at YouTube, a lot of time people just tell you, how much I make today, 14 grand, 30 grand, 5 grand here and there, but they don't tell you, okay, let's say the next 6 months, how much you actually made from one share or one currency cross or one commodity. They don't tell you. They keep on jumping around everywhere. And I find it a bit difficult for me to follow anyway, and this seems to fit me better. So this is why I recommend trend following for people with a busy life, so to speak, and so for and long-term view as well. Anyway, the end of my round. Continue. Next is TLT ETF. Short term is a buy, medium term is neutral, long term is also neutral. This is another thing. You see, this TLT is basically tracking the treasury bond. Okay, so treasury bond more or less at the price. So treasury bond price increase, the treasury yield decreases, which is we also seen the last month or so. Why people jumping back in the bonds? Bonds only give you 1.5%. Let's say 10 years yield of interest rate. 30 years yield at the moment is below 2.5. It's not making much, but then people jump back into TLT or bonds, US government bond. What for? And the other thing I'm sort of worry about is US government might try to play tricks again. Let's say there's last year in March, we all know COVID-19 happens, and then the March and April time was scary for most people. Well, and then of course the U.S. bonds, government bonds seems to have gone up a lot, and the yield gone down to like 0.5 of percent. Will this happen again? Well, this year, the U.S. government play some tricks and causes somehow, maybe conspiracy theory here, causes a big fall in the U.S. stock market, and therefore, of course, make people jump into the U.S. bond market. The U.S. government need that people to buy the U.S. bond because it became borrowing so much. they need somebody, buy the bonds so forth, rather than themselves, U.S. Feds buying U.S. government bond kind of thing. They want other government, other country, other financial institution buying the bonds. And we all see this every time there's a big panic sellings in America. Stock market, the bonds always go up because people trust in the U.S. government will pay up. They all jump to the flag of safety kind of thing. So with U.S. dollar or U.S. government want to overspend so much, I mean that's maybe the other thing they're going to do against since 2007, 2008. Suddenly something happens, the U.S. Stock market gone crashing down, people jump on the bonds and really help the U.S. government to, cover some of its spending. At least somebody's willing to pay for it, rather than, left hand paying right hand within staying within government in America, that kind of thing. So something that's conspiracy, something to look out for. But on the trend falling side, I think, TLT short term is definitely in an uptrend. It also changed the medium and long term outlook to neutral as well. So it might have still got legs. So we'll just see how it goes. But the implication is far. So it's worth a train of thought. To think about this. Next is Tesla. Short term is a buy. Medium is neutral. Long term is a buy. Recently, unfortunately, there seems to have a bit of fire happening. I think last week or so on Tesla cars crashing and so forth. But don't seem to have doing much to the share price though. We just have wait and see. Next is Australian market. The index XJO. Short term is a buy, short term, medium term is a buy, and long term is also a buy. So that's following Dow Jones as well. So we just have wait and see. Last but not least is Alibaba. Short term is a buy, medium term is neutral, long term is a sell. Like I said last week, the fine from the Chinese government is huge, but in the scheme of things for Alibaba being such a big company, it's like just a little smack on the back of the wrist kind of thing. They will recover, but also it does send a strong signal to the rest of the internet companies, online companies who are making quite a lot of money from the Chinese public, that the Chinese government is willing and will have the might, the energy, and the strength to actually move through. So if anybody has some sort of dominance, if the U.S., the China market, in this case it's online, but it could be in any market. I think the Chinese government basically showing Steve say, you can make your own money, but if you become too dominant, then I'm going to come in. So it's very similar to U.S. We just have to wait and see on that. But however, when the Chinese government sort of do it, stamp down on Alibaba lending money uncontrollably, Alibaba is not a bank and not following any banking regulation. It's asked to do so, fine them. People make a big hoo-ha about it, news about it. Oh, how bad the Chinese government is, blah, 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 and stopping Ant coming out of the IPO last year, blah, 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 and how they hurt Alibaba. But look at US is doing that. Look at UK is doing that. Just look at the credit card, Amazon credit card, which I've got one. They only give you a credit like $1,200, and so they increased it to $2,000. But back in the old days, 2005, 2007, the last big economy boom before the bust from the subprime market, I was having credit card that gave me 15 grand of credit, 12 grand of credit easy, and most people just give me 10K for nothing, and so forth. And that means I can spend whatever it is. Of course, the European government, the American government got wise in it and stop it. So why can't China do the same thing? It's just a bit, train of thought. It's a bit of like rule for different worlds, one for Asia, one for the rest of the world, or one for America. It's a bit strange. But anyway, I think, in my view, Alibaba have, just the breadth and strength underneath it is there. So long as the Chinese government then forced the breakup, like what some U.S. government do to some companies, or so is in UK. I think Alibaba will able to survive, and over time we'll be able to make more money. Chinese market is huge, and Alibaba is well known, so is Tencent and so forth. I think over time, once this this bad weather, so to speak, have gone over, and then Alibaba is following the Chinese rules and on continuous business, I think it will survive and thrive some more. The other criticism I have for Chinese government is they have been trying to regulate Alibaba for a long time, or Ant Group, but they haven't come up with any concrete thing until this Ant Group IPO forces its hand, and then people might say, yeah, Jack Ma's speech last in Shanghai, Bun's meeting, whatever it is, doesn't really help either, or that triggered it. I think overall, Jack Ma knows about what's going on in the background and just really moan about it because he couldn't get a go ahead or do things the way that he liked to do, and so forth. So and that's why he's rant and saying things out of his character, and then of course Chinese government step on it because he's losing face and so forth. But I think overall, Alibaba will still be there. China don't want to really step on Alibaba too much. Obviously, Alibaba is well known internationally, and the Chinese Communist Party will try to use this as a showcase, to tell the people around the world, you can make money here, but just toe in line with the Chinese government policy. But like I said before, Chinese government have to come up with the policy themselves. Just talk about things and say I will regulate, but then come up with concrete rules and things for companies to work around with. It's rather difficult. So they call. I think the Chinese government scored their own goal either on that one. So, but anyway, I think Alibaba will survive, and I think overall time it will be a great company to buy into long term. But short term wise, basically it's still a buy. Medium term is neutral, long term is a sell. So I will just continue watching this one. Anyway, that's enough of my rant and update for this week, and I'll speak to you next week. Stay safe and bye for now.